Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino, who should be on here this afternoon. Good morning, Davey. Morning, Lauren. Good morning, Patrick. With our official uh, keeping track of the 1456K for jobless, continuing jobless claims. Again, for those new, that's the point from the low print that would statistically pretty much secure a recession based off the percent increase historically. Good morning. Yeah, Bulls on parade. Good morning, Options 22. This is going to be a boring live stream. Good morning. Jacob, good morning. Mickey, 78. Boring. Why? Because it's just essentially, from my point of view, trail stops higher. Let's see. We had the producer price index coming in, dropping below zero, coming in at negative 0.5 month over month. Initial jobless claims coming in a little better than forecast, but continuing edging higher, still edging higher, and this trend is definitely up. Core did not drop below zero, still beating, but still at 0.2% increase. And remember, focus on the core more than the overall PPI. Let's see. And then year over year PPI coming in better. And tomorrow, remember, we have preliminary consumer sentiment numbers, which I'm expecting also to come in better than expected for a couple factors. Gas, and that's the thing that most people look at first and foremost. And it's still vacation season and August and party on summer mode. And people are generally in good moods then. So we should see consumer sentiment coming in better. All right, so that's out of the way. S&P 500, besides healthcare, pretty much up. Healthcare looks like it's getting a slight rotation out of there this morning. FOMC shifting dramatically back to the 50 basis point hike versus 75, and we are still in positive gamma territory. Nothing much going on with earnings this morning, not even stuff that I'm interested in. So that's where we sit. That's where we sit. Good morning, Anissa. So let's see. Again, we haven't even had a nice little 4-hour pausing bar, just edging higher. Everything's an overbought, but remember, things can get more overbought. My next key levels are 42.73. Then we have remember, the 200 magnet and the next harmonic, 43.27, 43.40. Short term, if we get any pullback, the little breakout ledge, I'm watching 42.24 to 42.27. Unless there's some headline news that comes off, that would just be an orderly pullback. Where if we were getting the bigger pullback, which again, it would take something happening or some pretty substantial profit taking, but I wouldn't see profit taking kicking in until sometime tomorrow, given the strength of all the money still flowing in, all the stock buyback programs kicking in, all the CTA programs kicking in, chasing stuff higher. The more substantial level would be right around this 4,200 and then 41.84, but even those pullbacks keeps it in short-term bull mode. So not much else to talk about, and not a great pausing bar, so you got to wait. If we do get a little pausing bar, you can use a little short-term harmonics on that, but nothing substantial. Nasdaq moving through this 13,476 minor. Again, that was stop raise, little pause there. And that's not even a strong pausing bar. It was more so on the 1 hour because at least you got a little pullback window. Next levels up, we have 13,535 and then 13,618. Do not ignore this 13,535 area, 533 area, because you have a fair amount of topping area up there, and it could take a little bit to chew through it. So that is also another stop raise. Then 33,618, and then my next target, even in front of the 200 for that, is 33,918, which would be the 50% retracement from the whole down move. Support, I'm watching the prior harmonic that we paused at back to about 13,465 to about 13,475. You broke below that, I'd be watching this other key resistance level and support level from some of the overnight session back at about 13,400 to about 13,415. The major level on the Nasdaq would be about 13,355. And if we start getting major selling pressure, it would be 13,258. Dow, my next major target is 33,751. And then remember, right above that, we have the 200 and this pretty substantial topping area. So the next target area would be 33,851 to about 33,952. Pull back again. Everything's getting overextended, but can continue to get more overextended. My major support levels back at 33,250. Russell, again, just hit the next target, 1986. Russell's acting like everything's in full-blown recovery mode. Beyond that, there's no great place to put a harmonic. We already hit the reverse, so I'm just using 2013. Which is the 200 area. So that's the next key area, moving up with that. So that harmonic is done. Your support's back at about 1956 to 1949. DAX trying to get a toppy mode going, but I'm just really watching the bottom of the 4 hour, not even this low from the 10th. I'm watching the 4 hour rotation zone and the hooking up 50, about 13,420 for a close below that to confirm a short-term top. Other than that, it's interesting because on this latest swing, we haven't been able to get yet above this 62.5. So 13,831 is key, and then it's minor 13,886 and then 13,983. But on a close above that, then I'd still continue to watch for higher prices in the DAX. Notes, trying to build a base here. Same thing, long-term bullish mode. Short-term, the only thing that changes this is to move back below 1908. Wanting to see how it does breaking above this short-term resistance about 1928, but I want to see how it reacts at about 120.10 to see if we can get it, especially a daily close above there. With daily cycles turning up, weekly cycles still trying to roll over, so we could see some choppy, even some downward pressure still in the notes with this before we put in a more substantial bottom. Crude triggered this double on a 4 hour. This is still one side of that double. This is the other side. It looks really nice on the daily. You can see it here. So this could be triggered on the 4 hour or the daily. Now remember, slightly lower probability, but at least your stop reduction zone is at the daily rotation zone. And I'm actually expecting more of a return to the weekly rotation zone at this point, but that's still the stop reduction zone. So triggered on the 4 hour, little pullback move, and the targets 95.15, 96.39, 97.64. I'm really focused first and foremost on the first and second targets, especially the first one for stop reduction. Where else are we sitting? Gold still basing at the top, still holding this. So still watching. My targets are 1842 to 1844. And as long as we don't close back below the rotation zone. Silver bouncing off this 2080, but my next major target area is 2110. Dollar index still keying off, watching for a lower return closer to the bottom of the rotation zone, sitting against major weekly support. And cycles finally getting to the bottom of the weekly and turning back down on the daily. So I will start getting, over the next few days, watching for a more substantial bottoming pattern in here with the dollar index and gauge the next bounce play. But other than that, nothing long term. What phase is the stock market right in now? Bear market go-go rally. Bear market summer go-go rally. There we have another caveat. VIX, which is going to be a gift one of these days. especially I would, oh boy, this will be a gift going into September if it hits some of these lower harmonics. 1930, then 1738 are the next levels. Today I'm watching to break below yesterday's low. Otherwise, it might turn into a slightly choppier day. But 1930 next minor, people are going to key off about 1850 for, I'll put a little line there. People are going to key off around that area. It was got some minor significance, but nothing really to do, even on unless we start getting back above today's little high print so far and really back above about 2025. Not even really any pullback would just be a potential buy level. Euro, we're getting back up to this my breakdown zone. So we've had that and then if we continue above there, we'll go targeting a return to about 105. Getting a little cycle to the top on a weekly, but daily still has room to run, and weekly's not rolled over, and it looks like we could close back above the 50. I really want to see a decent close either today or tomorrow back above this 103.80. Then it could be potentially a really nice trade to 105 area again, 104.90, 105. Bitcoin finally getting the move on with the coming up and virtually hitting this 50% with the rising channel line. We start getting a close above this channel line, especially, which would take us above the 50%. Then I will target the 62.5 or somewhere in this area for the next rollover play. Now, since we've hit that area, I can do the next harmonics. So 25,550 and 26,440 to 26,8 for the potential rollover plays, but this would be a stop reduction. Cycles at the top, but not yet really rolling over back into the weekly rotation zone. So anywhere in here, I will start watching for the rollover play, but nothing yet. Tesla, pre-market slight area gap up. If it doesn't fill that gap just off the open at 907. And then the gap, the minor play a lot of people focus on is back to the open 933. So don't ignore that before the key full gap fill. 925 is the gap fill. Then people will focus on that 933 print. If it sustains it, again, we have strong Nasdaq just trying to climb up here. That does not invalidate. Well, let's see. Hold on. Let me give you, since it's stop reduction, we were hit there. Let me give you the stop reduction target. The would be a close above 902.03 would then take this remaining double off the table. So that's your key level, even with this minor gap up. Good morning, John. Good morning, Rams of Fall. Bull capitulation. We don't know. We're nowhere near. Well, we're nowhere near. Capitulations are generally to the upside. I mean, to the downside. Capitulations, you don't generally have to the upside. You generally get rollover moves. Return to the mean bull trap. Well, longer term, since longer term we still have bull signals. I mean, bear signals. It could be a bull trap, but I hate categorizing things like that. What does a bull trap mean? It just means the market's then rolled over and anybody who was bullish is trapped. I'm still in short to slightly medium term bullish mode. Nothing other than that. Longer term, nothing's changed with systematically from the bearish mode. Good morning, Dr. Michael. Your spiders, remember, this is essentially trail stops. Can't get really bearish or even pullback level on until you get below this 917.50, 917, this key area. Key close with the reversal open. Let's give the exact numbers. Right around 418.78. No, sorry, that's wrong number. 417.66. Can't even this, so I'd just be trailing a stop. In longer term, if you're trying to capture that moves upwards to 200, my stop would be even lower, at least below 409.60, at least, if not below 405.65. Overall, you're getting today. We could potentially yesterday we got the key close above this resistance, and today there's no clear paths or stopping points in here. You want other stop raises. This is where you can go back to some of the longer term harmonics to raise stops. So 424.55 would be the next major stop raise area, which happens to correspond to this key gap open. And then look at the next harmonic, 431.38 with the 200. So that's those. It's essentially trail stop mode. Sorry for being boring, but that's where we sit. Potential double still in play for the Nasdaq, but that's a long way off from even confirming. So just going to leave it on the chart. But your next major areas is 329, like I talked about yesterday. 329.23 to about 329.77 is your next major. Minor was for a stop raise 327.85. Looks like we're going to open just above that, so that would still be a stop raise. Even in the short term, and this would only be short term, would be a break below yesterday's low for a gap fill. And that would just be a short-term pullback play, and then we'd have to gauge to see if it rolled into the potential double. Remember, just because there's a potential bearish pattern on the chart does not mean it ever has to trigger. This could march higher, and it could technically even be on a strong day today being validated today. But you got to keep things on both sides. You got a minor on a 15-minute chart, yeah. You got some minor divergence, but that's a 15-minute pullback. A 15-minute pullback, you could be looking at 325.19. I mean, it depends on your short-term time frame. A 15-minute divergence is not calling a daily top, so keep that in mind. Your daily cycles or 4-hour cycles are turning up. Daily cycles are at the bottom and turning up, so we could easily see weekly cycles are still pinned to the top. I imagine at some point we'll get a sharp and sudden move, but there's nothing yet. Unless news comes across a wire that's earth-shattering, there is nothing that's, especially today, there is nothing going on. Look, I mean, you got numbers out of the way. Natural gas storage change isn't going to do anything. The auctions aren't going to do much. And tomorrow, this is not going to do much, the import-export prices. So we got consumer sentiment, the preliminary numbers, and some inflation and expectations. And we could get some profit taking going into the weekend because we've had a substantial rally. But I'm not seeing anything else on the agenda today. So that's why I'd be in a slightly choppy to bullish mode with trail and a stop. So that's where we sit. When there's lack of stuff out there and we're just in go-go juice mode, yeah, we don't have to have a strong momentum day, but I wouldn't be fading this rally. I'd just be looking for potential pullback rotation patterns if we get them. And I told you the levels that would get me, and those would be very short-term bearish, like back to the Qs, unless we start doing a gap fill play, and that would be a short-term bearish pattern. A more significant bearish pattern would be if we triggered the double. But those major topping patterns just yet? Would that invalidate the call to go to the 200? No. That would just be a bigger correction out of major overbought condition in the short term. Since some days it's just wiser to just not do much if you're already long, and you don't have to futz with positions every day. Sometimes not doing anything is the best move, especially if you've already got a key long position. And would I be chasing the markets to put on core long positions up here? No. This would not be where I'd be chasing the markets higher. If you already got something, and I'm talking chasing, putting on something for another swing trade higher, we're getting to at least where we should get at least a pause level in the next day or so. And sometimes don't get too carried away, options 22. Sometimes you're best to reduce a little position size and let some things run. Especially possibly going into Friday, as long as he's bullish, as long as we don't break down and start doing some gap fills. Other than that, sorry, not seeing much besides boring day. All right. I will talk to everyone later. We should have Bob on this afternoon. Not expecting much to change, but if something does, then I will let you know. Thank you, Josh. Again, everybody have a fantastic, thank you, Options 22. Everybody have a fantastic trading day. And just don't do anything silly in thin summer markets with go-go juice. Don't do anything silly. Don't be brave and try to call a top. Don't try to fade something off a short-term top thinking you're going to catch a bear market top. That would just be inane at this point. Bye for now.